Dylan, what's up, man?
How we doing? What's up, guys?
We got a lot of stuff to get through, and I got some fun questions for you at the end that you don't know about yet. But today, Bitcoin on-chain derivatives and macro. Great title to all these slides. Let's start with Bitcoin realized market capitalization, the realized cap. What the hell is this, and why is it important?
Yeah, so this is kind of a mainstay in a lot of my slides, my slide decks with you guys, and this is just kind of a bigger kind of broad picture of the Bitcoin market. So that realized cap is just the aggregate basically figure of every Bitcoin that's ever moved and the price it was last moved. So you can almost think of it as like an organic price of Bitcoin. And oftentimes during bull cycles, when the Bitcoin price goes parabolic, realized cap will increase with it, but with a lag, basically because new capital is flowing in to the asset and old coins are distributing. And so basically over the last since about August, we've seen these capital inflows have really started to slow, but in absolute terms, they're still pretty big. I mean, it's about $90 billion of capital inflows since August. And to put that into perspective, the next slide there, if you're looking at the chart in linear terms, that realized cap figure, it's basically since August, we've seen realized cap grow by its entire figure at the top of the 2017 market. That should be labeled 2018, January 2018. It's $90 billion. So in relative terms, we haven't seen really the capital inflows for Bitcoin to be a multi-trillion-dollar asset yet. But in absolute terms, the capital inflows are here and they're continuing to come in. It's just for the time being, it's slowed up a little lackluster in relative terms.
Okay, when you think of this realized market capitalization, can you explain, is this a kind of backwards looking metric in your opinion, or is it a forward looking metric in terms of, do you use this to understand what's already happened, or do you use this to try to anticipate something that's going to happen in the future, whether it's price or other types of metrics?
Yeah, that's a great question. I think with realized cap, it's more of a backwards looking metric, obviously, because you can see just, the price at which every coin has ever moved. Realized price is just realized cap divided by circulating supply. Where you can kind of be more forward looking with the metric is if, say, you take a ratio of, and I didn't include it in the slide deck, but that market value to realized value metric I present a lot, it's just a ratio of price to this realized price metric. And oftentimes the lower it goes, currently it's about 1.75. The MVRV ratio below 1 is like a generational buying opportunity. So it's not often that we see it, but that's more of a forward-looking metric when you take a realized or a ratio of these two metrics. And so, on a relative basis, it's a lot more attractive to buy Bitcoin at 40K today than it was at the beginning of last year. So that's more of a forward-looking way of looking at this metric.
Got it. Now we've got the realized price 30-day change, which is basically just taking, the 30-day kind of rolling average and looking at how that's changed over time?
Yeah, so this is just a rate of change, almost a derivative, not to be confused with derivative financial markets, but for any calculus nerds out there, this is just a derivative as a rate of change of this realized price metric. And so you can see, since say August, we've had 90 billion around there of capital inflows. On a relative basis, it hasn't been that much given just the market size of Bitcoin. It's obviously grown a lot since 2017. And so just on a relative basis, just to kind of reiterate, capital inflows are here and they're large, but it's not enough to send Bitcoin parabolic just yet.
Got it. And so then when we go ahead and we look at the 3-month futures annualized rolling basis, when you start thinking about realized price in relationship to futures or other types of more exotic, ways people can get exposure, is there a connection between those two things? Or do you look at these as kind of separate and distinct types of data points, but it's important to look at them in totality to actually understand what's happening with Bitcoin?
Yeah, I think it's you kind of have to look at all of these things to get a big picture of the market. And the reason I included this chart and obviously basically this rolling basis, the spread between that futures price and the spot price of Bitcoin, in this case, the 3-month futures, and then we annualize that out. So say when yields are 20%, really that basis spread is about 5%, but we annualize that figure out. And so obviously there's a really, really strong correlation here. And basically what it's showing is that while you haven't seen this realized price or this realized cap metric grow a lot, expand a lot in relative terms, this chart is basically telling us that derivative speculation, and mostly by incumbents, whether you want to call them whales or whether it's crypto hedge funds, basically the speculative bid in derivative markets has been basically the largest part of this price action over the last, say, quarter or 2 quarters. Those organic capital flows that we saw at like late 2020, early 2021, again, are here, but it's just not enough to send Bitcoin really parabolic. And when we broke that all-time high and went to 69,000, it was mostly just derivative market speculation. That's been the driving force.
Got it. Now you've got this Bitcoin price weighted by hourly perps funding rate, which is an absolute mouthful to say. Explain what this is, and then why do you think this is so important to pay attention to?
Yeah, so perps is short for perpetual futures. It's another futures market instrument. And basically this is, the perps is the largest derivative contracts in crypto and Bitcoin. And so what you can see here is weighted by the funding rate. It essentially just kind of shows when Bitcoin's a little overheated to the upside or downside, or it's more just kind of flat. It's basically a way to kind of show or to quantify that speculative bid, that speculative premium. So when funding is really high, what that means is that derivatives, that perps price, that contract price is ahead of spot market price. So that's, when that funding rate is very elevated, it's saying that that's the driving force in the Bitcoin market. And, over the summer, we saw the opposite, where that funding rate was below it was a negative funding rate. And so derivatives were driving the price lower than spot. And so that's why we kind of got a big short squeeze. And so it oscillates, and definitely there's kind of a huge sentiment factor here. But that's kind of a lot of the reason why Bitcoin is so volatile, and we see these moves is these derivative markets and understanding the dynamics behind them.
Got it. And so if we go ahead and then we look at the U.S. government bond yields, which I know you love talking about, some macro data, help us understand why the bond yields are acting the way they are and what that has to do with Bitcoin. Yeah,
so obviously we've seen a 7% CPI print, highest in 40 years. It comes at a time when bond yields are near historic lows. In 2020, we kind of got to that historic low point. Yields almost went to zero, and the Fed funds rate is at zero or 25 basis points, basically there. And recently, kind of the Fed's come out a little bit hawkish in 2022, saying the market's basically pricing in 4 rate hikes. And you can see this with, say, like the government bond futures market. But you can see these yields are really starting to bend upwards. And for those that aren't familiar with bond contracts, yields are inverse with price. So when yields go up, the price of bonds go down. And when global debt markets are a few $100 trillion, and that risk-free yield is starting to go upwards, this means that government bonds are being sold. So a lot of things, equities, Bitcoin, as these yields go up, what it's saying is that these prices are going down. And just with how the credit system works and all the collateral values, essentially, it means kind of more of a risk-off is coming as the CPI print is coming really hot.
Got it. And so when you start to look at the Fed rate hikes, obviously there's people who think there's going to be 3, 4. We've also seen, JP Morgan's CEO, Jamie Dimon, talk about 7, 6. Where's your thought process in terms of like what's more likely? Is it a lot, or is it, maybe we get like 1 to 3?
I think what the Fed's trying to do now is they're really trying to get markets to correct a little bit without doing too much. They're trying to talk markets down because they know everything's in a big bubble. I don't think they're that oblivious. And currently that futures market's pricing in about 4 rate hikes in December of 2022. So it's pricing in a Fed funds rate of 125 basis points, 1.25%. Right now it's at 25 basis points. And so that's the expectation. And I think they're going to hike until something breaks. I mean, that's what they've been doing for basically the last decade or two. They try to tighten when the economy is running hot, and then they end up breaking something in the bond market or the debt markets, and they reverse course. And so I think that's kind of my base case here. I don't know how far they get, but credit markets are already starting to gurgle a little bit. You can kind of see that contagion already starting to unfold. And so I guess we'll see how far they get.
All right. Now we've got the S&P 500 reported earnings yield compared to the U.S. Treasury 10-year bond yield. When you look at this, what is this showing you?
Yeah, so the S&P 500 earnings yield, this is the inverse of the PE ratio. PE ratio is just a way to kind of value a stock, price to earnings. How expensive relatively is a stock? So when we see this blue line, that's the S&P earnings yield, what it's showing is that's PE ratios are continuing to go up, and it's very, very correlated, this earnings yield, with the 10-year Treasury. And so, when we're in an environment where real yields are deeply negative, that's that CPI at 7 and the 10-year Treasury at, say, 1.5 or 1.6. What it's really showing is that that's the reason that equities are going to the moon. And so as the market starts to price in some rate hikes, some sustained inflation, whatever the case may be for these bonds to start selling off, that's kind of also a pretty heavy force for these equity markets to sell off. The discount rate on all of these equities, if yields go up, the valuations of these companies get crushed. And so when you're starting to see tech sell off, if you look at, say, ARC Innovation and their ETF, a lot of these long duration growth stock companies that aren't very profitable and they're being priced out at really high, insanely high multiples. The reason those are selling off is because of this developing environment of potentially higher yields, and that's what the market's pricing in.
Yeah, it's fascinating to watch this all kind of occur, given what's going on in the crypto market. And then we've got the Bitcoin S&P 500 realized correlation, which seems to be like the topic du jour of tons of both macro investors and also mainstream media, of just like, is Bitcoin and the S&P 500 correlated, and how should we think about that? What's your take on this chart?
Yeah, so this is the rolling 1 month correlation right now. It's about at 56%. So it's pretty well correlated here. And over longer time frames, I think that correlation breaks down further. But really, when we're this kind of late in a debt cycle, everything's riding the tide of expanding or contracting liquidity. And so when we're starting to see that tide pull back a little bit, Bitcoin is treated by many as a risk asset. But I think what is often still, the information asymmetry is still very strong, is that ultimately Bitcoin is also a risk off asset, in the sense that, yes, during a liquidity crunch, during a period where the dollar gets bid, say March of 2020, Bitcoin is going to take a brief hit. But ultimately, the store of value thesis for Bitcoin isn't wrong. There is a production cost. There is a way to custody your Bitcoin with zero counterparty risk, unlike any other asset before. And so in that sense, Bitcoin is a risk off asset and is something that you want to own in a deflationary environment if it is allowed to play out. And I think the reality is that deflationary environment, however long it takes to unfold, I think it's not going to be allowed to persist for too long, because this global everything bubble just can't take it. And so while this correlation is pretty strong, and if equity markets sell off as the market prices in a Fed hike or multiple Fed hikes, I think the reality is, the macro funds, these investors that are looking just at correlations and not a fundamental understanding of Bitcoin, they're going to sell the asset. And that's okay, because the people that are, have conviction and understand the thesis for a non-sovereign asset in the digital age that can't be printed or manipulated, they understand what Bitcoin is and are happy to buy at a discount.
So really, there's a strong argument that there's been a financialization of Bitcoin. There's a different set of holders now. They're going to treat this like their risk asset versus the, kind of quote unquote Bitcoiners who are going to actually just hold Bitcoin as their reserve asset. And so even though it's the same asset, when you have different people holding it for different reasons, it gets treated differently. And there's almost a mismatch to some degree of how much money the Wall Street and financial institutions have versus the, average pleb who says, no, this is my reserve currency. Is that a fair way to think about it?
It's a great way to think about it. And I think the financialization of Bitcoin is always going to happen. As Bitcoin is a $800 billion asset today, it's going to be a $5 trillion, $10 trillion asset at some point. The larger it gets, I think the more pure, the more pure it becomes at showing the everything bubble and just being a representation of the credit expansion and credit contractions in the legacy system. We've seen that in 2020 and 2021 and now going into 2022. And I think it's going to become increasingly true into the future. It's just basically a calling the bluff of the central bank put. And it's basically a check on the Fed to say, however irresponsible you are, however far you want to take this, people have an opt out. And so whenever they do reverse course on these hikes, and they will, depending on when the system breaks, when there's a big crack in the bond market or in equities, if say equities drop 20%, I think the reaction of Bitcoin will be quite telling from that point, but we'll have to wait a little bit for that, in my opinion.
Got it. And when you start to think about that financialization, obviously, if we kind of think of on the far left, maybe of the spectrum, you have the individual, the retail investor, they're treating Bitcoin as that reserve asset. On the far right extreme, I think that it becomes really interesting when you think about maybe a nation state. And like, if you look at El Salvador, like they're holding it as a quote unquote reserve asset as well. They're not trading it. They're not treating it like a macro risk asset. But in the middle is the Wall Street firms, the organizations. And so is it concerning to you, or is it a positive signal that retail and countries almost act the same versus the institutions on Wall Street? Like, is it just time horizon difference, or like why is it that an individual in a nation state act the same, but a trading firm or some sort of bank, they have much more of a short time horizon?
Yeah, I think that's a fair way to put it. I think ultimately Bitcoin is just in its monetization phase, and it's slowly entrenching itself on everyone's balance sheet in the entire world. When you decide to make it, to allocate to Bitcoin, you're saying, I'm going to hold this on the right side of my balance sheet, on the asset side of my balance sheet. And there's assets and liabilities everywhere. And so ultimately, the dollar being that world reserve currency, there's a lot of dollar denominated liabilities out there. And so depending on, say, someone's risk management or their asset and liability structure or breakdown, would say something like a hedge fund or a pension fund or an endowment where they're holding, say, U.S. Treasury securities or anything else. Bitcoin is going to be treated in that risk bucket, right? It's a risk-on asset. It is a high beta play on central bank liquidity. And for the plebs, or say for El Salvador, they're saying we're going to adopt it as legal tender. We're going to adopt this as our unit of account, and we just want to accumulate. And so I think ultimately everybody is kind of depending on how they play it, but it's still just monetizing. It's a new asset. It's still only 13 years old, and people will allocate and play to how they want. And I think ultimately it transfers from that risk on asset to just being a risk off asset as people kind of understand that the end game of central bank and fiat currencies is always basically perpetual inflation, perpetual monetary expansion.
Yeah, it's crazy. Joe John, what questions you guys got?
What's up, Dylan? Mine's just around news. So I think it was this morning, Cash App announced that they're integrating the Lightning Network, where U.S. customers will be able to send Bitcoin anywhere in the world instantaneous for free. How does news like this play into your mind when it comes to like the broader price action that we might see?
Yeah, it's a huge announcement, and I think the market doesn't really understand how big it is. Just the normalization of and adoption of Bitcoin and second layer solutions like Lightning. How many Square terminals are there in the US or around the world, right? Like what Jack Mallers is doing, what Jack Dorsey's doing. It's really, really exciting. And all this stuff like Lightning Network integration, it's a completely open network. So anybody can plug into this thing, just like Twitter did, right? They just connected their API. And so this is not something where price will spike, like say, if there was some small cap altcoin announced some news, the price would spike 10 or 20%. Or if if GameStop announced that they were accepting Bitcoin or Dogecoin, the price pumps. Well, with Bitcoin at a $800 billion asset, it's not gonna pump on news like that. Ultimately it's just about the supply and demand dynamics that take sometimes weeks, months, quarters, years to unfold. That supply squeeze thesis isn't wrong. It's just often a little early, and derivatives kind of mask what's truly happening. But when someone like Square comes out and says we're building on the Lightning Network, I think the logical thinkers, the people that have been around tech for a while, can kind of see what's happening under the surface and just how powerful these network effects ultimately are. And I think that's something that's quite misunderstood, in my opinion. It's not priced in.
John, what you got for us?
Dylan, so Intel also came out this morning and basically stated that they are going to create mining rigs for people at low energy and very efficient rigs. How does that affect the hash rate? And like, is there a cap on how like many miners can be on the network at once? Like, at some point, does it become bad for the network with too many miners, or not at all?
No, there is no cap. And I think ultimately there's the largest economic incentive in the world to continue to spin up and plug in these miners. If you have any sort of waste energy, underutilized energy resource, Bitcoin is going to come in, Bitcoin mining, and they're going to harvest that underutilized energy and almost flatten out these power costs around the world. We're just starting to see that play out, but it's a no-brainer for all these semiconductor manufacturers, chip manufacturers to get into Bitcoin mining production, or just whether that's ASICs, or you started to see like there's GPUs for other crypto networks that are being produced, and there's a super high demand for these chips because they're so valuable, and so it's a no-brainer, and I think it's ultimately very encouraging. We want to see competition in this field, and for a while it was kind of dominated by a monopoly with Bitmain, and so just to see other people announce their, I think Square announced that they were going to produce Bitcoin miners. They were going to attempt to. Blockstream has also announced they acquired an ASIC manufacturer, and so to kind of see this competition and potentially to see it on board and onshore in the United States is very encouraging, and it's a good development.
Yep.
Dylan, we just got news that Intel, a $220 billion industry leader in hardware manufacturing and chip computation, is going to launch a low voltage kind of high impact Bitcoin ASIC for mining. When you see a player like that start to participate in the industry, is that just like yeah, of course, like everyone's going to do this? Or is that something else that like is at play here? Like Intel, right? This isn't Bitmain. This isn't some no-name firm that's like, oh shit, we got to throw the Hail Mary pass. Intel does whatever the hell Intel wants to do, and they're going to get into Bitcoin mining. Like, what's your take on that?
Have you seen the price of ASICs recently? I mean, it's a no-brainer. Yeah, I mean, they're all going to come. So, I mean, ASIC manufacturing as a percent of total semiconductor production is still very small. I think it's less than 1%. And so that number is going to grow. And demand for ASICs is going to continue to skyrocket. Bitcoin mining margins are still pretty ridiculous. And I think the end game is that there is going to be a commoditization of ASIC miners. And profit margins for Bitcoin miners over the long term, not next year, maybe not the year after, but 10 years out, 50 years out, 100 years out, the profit margins are going to be very, very thin, as it's the most competitive industry in the world, or it's going to be. Anybody can plug in these ASICs, and ultimately the ones that will win are probably have that power cost near zero. And so in the meantime, there's still this huge incentive to plug these things in, and profit margins are not near zero. You can plug in at 20 cents per terawatt or per kilowatt hour and still be profitable in a lot of places. That's like plugging it in at your outlet at home. And so in the meantime, I think ASICs are going to continue to be manufactured at a pretty rapid pace, and hash rate's going to go exponential. I've seen some estimates that hash rate's going to increase by 50% here in 2022. And so a lot of these things are going to be plugged in, and I think the price of ASICs is going to continue to go up by a lot.
When you think about hash rate and price and the relationship there, does hash rate pull price, or does price pull hash rate?
What came first, the chicken or the egg?
Depends who you ask.
Yeah, I mean, I think, rising hash rate strengthens network security. It reinforces the immutability of Bitcoin, and it, expands the network effects, and thus Bitcoin becomes more valuable, so more people allocate to it. It's a really tough question. I think there's no definitive answer there, but I'm bullish on rising hash rate and bullish on rising network security.
Got it. You guys got any other questions?
No. Thanks for coming on.
Well, hold on. I got one more question. Chill out.
Just being nice to our guest here. All right?
Calm it down. All right. Dylan, as you look forward over the next 12 months, we're still in January, so let's say 12 months by the end of this year, what is the one thing that you think has a high probability of happening that most people are completely ignoring or aren't talking enough about? Like, is there one thing where you're like, bam, this is going to happen in my opinion, but a lot of people aren't? We recently saw Fidelity talk about other countries adopting Bitcoin and things like that. But like, is there one thing that you're saying completely undervalued by the market or not being spoken about enough?
Yeah, I mean, that Fidelity thing was pretty big. I mean, a lot of Bitcoiners have been talking about it, but it's been more of a kind of a niche thing. And to see some giant like Fidelity come out and reinforce that opinion and that sentiment is obviously very strong. I think the 2020 midterms are going to be really, really interesting. I know behind the scenes, there's a lot of people working on Bitcoin advocacy and basically championing pro-Bitcoin candidates. And I think what we'll see is any crypto Bitcoin opposition from political candidates, they'll get ousted, and those pro-Bitcoin candidates are gonna be elected. I think in big numbers, and I think we're just starting to see a lot of those politicians come out. And so the narrative that the U.S. or that Bitcoin is pro capitalism, pro freedom, and is a U.S. kind of as a U.S. asset, and CBDCs are more of a communist Chinese Eastern sort of asset or sort of idealism is something that I don't think is priced in. And the market's still there's still people that will say Bitcoin's going to be banned. And it kind of blows my mind. I understand not everyone's living and breathing in the industry every single day, but I don't think that's priced in. The US just basically Bitcoin becoming this sort of thing that if you are opposed to it in the political spectrum or the political sphere, you stand no chance. And so that I think is a development that we'll start to see in big numbers in 2022. And by 2024, I think it'll be pretty understood that if you are not pro Bitcoin, then you don't stand a chance in US politics.
Yeah, I definitely agree with that. I'm not going to say much more, but the elaboration that I'll provide is that there are a lot of candidates right now who have recognized this. And it's similar to challengers in the technology industry going up against incumbents. They constantly look for an edge. And so what do? They try to build disruptive technology to get network effects, to get some sort of advantage on customer acquisition, distribution, et cetera. And the incumbents usually try to use regulatory capture, their size, their balance sheet, right, all the things. And pretty much people know in technology, what are the advantages of a challenger? Speed, innovation, strategy versus the advantages of an incumbent. It's playing out in politics right now. There's a lot of incumbent politicians who think this is the dumbest stuff in the world. They want nothing to do with it. They think that everyone who touches Bitcoin or cryptocurrencies or digital technologies like this, they're criminals, they're bad people, they're cheering for the demise of the United States, etc. And there's a whole bunch of challengers who recognize the exact opposite and realize that this is a generational shift in the way people think, in the way that they actually hold their wealth, in the way that they actually interface and communicate with each other, etc. And it's fascinating to me to watch people who are not even in elected office yet already reaching out and trying to establish support with the Bitcoin and crypto industry and to allow people to know if you're a one issue voter, I'm on the right side of your issue. Basically vote for me because I believe what you believe. And there's not very many issues in American politics where people are one issue voters, right? There's, maybe some gun stuff, there probably some healthcare stuff, but there's a couple, but there's not many. And now somehow Bitcoin and the crypto industry in a larger sense has become a one issue for literally hundreds of thousands, millions of people. And so there's entire, kind of political monopolies on a single seat that have happened because somebody was in a certain jurisdiction with a certain view of the world. And they said, I stand for this and I'm going to always be this. And if you're this one issue voter, vote for me. And the best examples are like, guns in Texas, right? Is the kind of meme, but there's a truth in the meme. I think throughout the country, there are going to be people who establish political monopolies on certain seats by just saying, I'm pro this technology. I want to see everyone be successful that's in this industry. And the wealth creation, the tailwind, the flow of intellectual capital, et cetera, into the industry will carry that person for literally decades to come in the political realm. All the way to the point where eventually one of those people is going to become the president of the United States. It just may take, 10, 15, 20 years, but it's going to happen at some point. And I don't think that that's being priced in by, many people in the political arena.
No, it's not at all. Brad Sherman's cooked. He's done. It's really encouraging to see that not many people understand what's unfolding. And so, I'm getting a little bit of a behind the scenes look, and it's definitely really exciting. I'm a single issue voter. I didn't vote in 2020. I think for the most part, bipartisan politics doesn't get you anywhere. Champion Bitcoin, stand up for pro freedom, and you'll get my vote.
Seems like a pretty good pitch to a politician.
I like that.
Is your view of the world, Dylan, that politicians are going to have to capitulate to the Bitcoiners?
Yeah, I think so. And it's kind of a paradox because ultimately embracing Bitcoin, like for say Bukele, right? Embracing Bitcoin, this thing that he has no control over, and he didn't have his own currency to begin with, but it ultimately reduces the power of the state marginally. I think actually quite a bit, but there is a paradox there that embracing Bitcoin ultimately will kind of strip a lot of the the fiat decree that politicians have currently. And obviously that's not too well understood, but the incentives are aligned where they should, because there's a whole lot of capital and a whole lot of people in the world across demographics, across races, across sexes, across both parties that are these single issue voters. And so that's something that I think this last 5 minutes that what we've been talking about, it's not remotely priced in or understood for that matter.
I think that you are very right, my friend. All right, how are we looking on subs for Twitter and for the newsletter? Anyone who does not follow Dylan yet on Twitter, you're wrong. Let's go. Make sure 106,000. Let's go. There we go. Gonna get, I think, 300K by the end of the year. Easy. Book it. Yeah, he's like, yeah, that's gonna happen.
300. That's it. I think he's. It's not about me. I'm talking about Dylan's. I'm talking about Dylan's potential here.
I'm saying, how many did you have?
353, but who's counting?
353. Can you get to 1 million this year?
Oh, so you got more faith in me, huh? Over here, Dylan
is 3x.
Okay, and what's Dylan at?
100. Can you get to 300?
All right. Are you going to get to
3 million? Yeah.
No, that's not 3x. That's less than 3x.
Yeah, it is less than 3x. All right. There's come on. We
told you 353. What up?
Dylan, I just want to call out here very quickly. Wait, go back, pull that back up real quick. I just want to call out in his bio. Look at the third word. No, look at the third word. Sports business and Bitcoin.
I'm riding the tailwinds. Send me some charts, man.
Give people what they want.
Bro, that's the male equivalent of a finance thirst trap right there going on in the Twitter account.
Like, all right, we won't even start with yours.
All right, see ya.
That's what I thought.
Dylan, thank you for joining us, man. We appreciate it. Anyone who wants, I forgot to mention this last week. So we'll post some clips from this conversation today, maybe tomorrow, and then we'll post a full interview Sunday. The video will come out, and you can listen to the podcast episode tomorrow. So I had people, I don't want to say who it is, Dylan, but I'll text it to you, who messaged me. There's somebody who runs a very, very large tens of billions of dollar asset management firm who DM'd me on Twitter last week and said, where are the charts? I'm listening to this guy talking about charts. There's no charts. He's listening to the podcast episode. So I had to go send them to him, and he watched it. He goes, okay, very smart, very smart. I enjoyed that conversation. So you got the eyes and ears of the right people. So keep it up.
Love to hear it. Appreciate you giving me the platform.
All right, buddy. We'll talk soon.
Peace.